I'm Corbett Wall with DV Auction, here with your feeder flash for Monday, May the 16th, brought to you in part by Joplin Regional Stockyards. 5,500 expected for today's feeder cattle auction there, which is a decent run, a little better than what they had last week, so we'll see how that goes. I got some dates coming up you might want to be thinking about. Joplin Regional Stockyards will be closed Memorial Day Monday. They're not always closed on Memorial Day Monday, but this year they will be closed on Memorial Day Monday, coming up here in a couple of weeks, so you guys want to plan for that. They've got a special cow and bull sale scheduled for June the 1st, and you know, the last few they've had of those have been pretty good. If you've got some replacement stock that you'd like to consign to that June the 1st special, get a hold of your field man and get those lined up so they can get them advertised. That's going to be an afternoon sale starting at 4:30 in the afternoon. My buddy Mark Harmon, Catfish, he puts out the Cattleman's News every month, and if you notice, the cover on this month's Cattleman's News is celebrating Beef Month, which is May, so you guys take a look at that publication. It's pretty good. Jockeying for Position, and you guys know that I like horse racing, and kind of disappointed that the Kentucky Derby winner's not going to be racing in the Preakness, but I guess they're going to give him a rest and maybe go for the Belmont. But on the Jockeying for Position, I'm talking about the different groups, ag groups that are taking sides on the Cattle Price Discovery and Transparency Act. It's the normal groups. You can pretty much guess which side they're going to be on. You've got all your sellouts to the packers and your big corporate feeders on one side, and you've got all your independents that like competition and price discovery on the other side. But I found a press release pretty interesting here late last week. It was the Oklahoma Farm Bureau. They've partnered up with the Oklahoma Cattlemen's Association to send a letter to the Senate's Majority Leader, Minority Leader, the Senate Ag Committee's Chairman, and the Senate Ag Committee's ranking member, urging them to oppose this bill. So you think, my gosh, Oklahoma, that's not really a feedlot state. We got a few feedlots there in the Oklahoma Panhandle, and the meat of Oklahoma really doesn't even claim no man's land that much anyway. But you look at Oklahoma itself, that is a cow-calf state and a stocker operator state there, and a lot of seed stock operators in there too. Why would a group, Farm Bureau there, that's supposed to be supporting independents, would they come out strongly opposing this? It's because they're partnered up with Oklahoma Cattlemen's Association, and the Oklahoma Cattlemen's Association just does whatever Texas Cattle Feeders and Kansas Livestock Association tells them to do. And they will always do that. So I don't even know why they have a separate association. I don't know why they don't just have their members throw in with TCFA and KLA. But this press release was in red letters, and it had strong words, and they strongly opposed this Cattle Price Discovery and Transparency Act. Now, they liked parts of it. They liked the part that had the cattle contract library in there, making that a law. They liked that, and they liked the 14-day announcement of what cattle are due to be delivered to the packers. They liked that, but they strongly oppose the mandate for minimum negotiated trade. Ooh, nasty negotiated trade. Who wants any negotiated trade? You know, that is your meat and potatoes of your fat cattle market, is the slim negotiated trade that we have right now. And I don't see anybody, even those that oppose this bill, I don't see any of them that are proud of the levels of negotiated trade that we have right now. In fact, if you look at your guys on the other side, on the far other side, your RCAPers, you know, they strongly oppose the bill because they don't think it's aggressive enough, because they do not like what minimum trade we have right now, what little negotiated trade. And the fact that this bill would initially freeze the levels that we have right now, which are actually better than what we had, you know, 3 or 4 years ago or 5, And so over the last couple of years, it would freeze those negotiated percentage limits. It would freeze them right then, and then work over the next 2 years at USDA's discretion to get economists in there to see where we can dial that up to be more fair. And then it'll be continuously adjustable from there till the end of time. We'll keep trying to get more negotiated trade in there. You think, why would these groups come out and oppose negotiation and competition? You know, they're having a hard time selling it, really, because anybody that's had anything to sell, they would a hell of a lot rather sell it to the highest bidder rather than the final offer. Or, you know, that's why people like auctions and things like that, because they get to offer their cattle up for competitive bidding, which is what this minimum mandates would do, would mostly be in the country. But, you know, there's a lot of sale barns all across the Midwest and the Southern Plains and Northern Plains that are thinking this would be a big boon for them, because they could start having a fat cattle auction or increase the fat cattle auctions that they already have, because they know that packers are going to be kind of short on the cattle that they can buy in a negotiated manner. Cattle auctions would be a way to do that. They get along really good in the Northern Plains with cattle auctions. I tell you about how good they get along in Yankton and in Sioux Falls and Dunlap and places like that, where people still bring fat cattle to auction. But these huge corporate feeders, they have been exploiting what minimum little bit of negotiated trade we've had for years and years and years. They use that price, that base price, with their sweetheart deals, but they use that base price when they're selling 200,000 cattle. They're using the base price that the guy that's got 200 cattle or maybe even 2,000 cattle to sell is able to negotiate with the packer, and then they exploit that price with their sweetheart deals. And we've known, and I've told you time and time again, that the only real premium in selling fat cattle in those sweetheart deals is volume, because that's what they really need, is just lots and lots of cattle. You don't even have to have that good of cattle. If you don't have them, you're fine, as long as you got a lot of volume. But you know, Oklahoma Farm Bureau, if you're a member of them and a supporter, you got to kind of shake your head at that. Watch them throw in with the Oklahoma Cattlemen's Association, which always throws in with TCFA and KLA, which are definitely just doing the work for your big corporate feeders and for the packers, because they're scared to death of them. Let's talk about your board for last week. June live cattle futures on Monday was up 80, Tuesday down $1.15, Wednesday up $1.17, Thursday down $1.92, and Friday up 42 cents, with June live cattle futures ending the week at 132.07. That was down 68 cents for the week, so not terrible, but you go out a little ways and it was terrible. August ended the week at 132.35, which was down $3. Your May feeder cattle contract, Monday was up a quarter, Tuesday down 87 cents, Wednesday down 77, Thursday down $1.27, Friday come back $1 higher after that WASDE report there for the grains on Thursday. But May feeder cattle ended the week at 157.87. That was down $1.68 compared to the end of the previous week. But look at August feeders, and that is so important. That's what kind of hinges the trade on all of your big yearling green grass feeders coming off those big grazing areas to go to the feedlots late in the summer and even midsummer there. But August feeder cattle was down $6.68 for the week at 168.02, and you think, my gosh, being down nearly $7 in a week, hell, that ain't nothing, guys. I did quickly mention, but I had heard some more talk about it. The Chicago Mercantile Exchange has expanded these limits for the cattle movement, for the daily cattle movement. They are huge. I'm not sure how much protection they give you anymore, because it's enough to break anybody Live cattle futures, your daily movement now for one single day, the first time, is $5. Then it goes to expanded limits of $5.75. They are raising that to $8.50 move in each contract per day. And not only can it happen the day after a limit move, the initial limit move, but it can also happen at the end, the last day or two of the traded month. My gosh, $8.50. How about feeder cattle? It's even bigger. 6 1/4 right now is your daily limit, which that kind of confused some of us here just the other day. But that's going to move to $7. So a limit move per day, $7, and then the expanded limit on that, if you had a $7 move, or it was late last couple of days of the traded month, it can move as much as $10.50. 100. Oh my gosh. You got to be thinking about that. That's another reason that these LRPs are looking so good. They settle with the cash market, guys. You don't have to worry about the hoops and dives and all that volatility in your cattle contracts there on CME. Talk about your fat cattle trade for last week. Up through Thursday in the 5-area feeding region, we had negotiated trade of just under 75,000, 74,600. That was up through Thursday, and not much trade to speak of on Friday. So down big time from the last 3 weeks or so. We had a lot of negotiated trade as your packers were trying to get as many cattle bought as they could for the next 2 weeks to a month out, because they know we're going to be running into bigger numbers. They can set that market up for a fall. And also they were short of market-ready cattle right at the time for current delivery, so you had them trading on both of those. But we need more negotiated trade, and if we had minimum mandates where each packing facility would have to meet those mandates, it would sure make for a better market, guys, especially for your small producers. It would keep more small cattle feeders in business, giving them a chance to ask more for their cattle and demand more for their cattle. It would keep them in business. It would keep them in the sale barns and out in the country bidding on your yearlings. Would keep those backgrounders in the sale barns bidding on your calves. I mean, it's a trickle-down deal, and it is absolutely direct. But they say that they're opposed to these bills because there's no economic evidence to show that the prices will increase for cow-calf producers and stockers. Well, any idiot would know that they're going to increase, but how are you going to know if they increase it? We either have it or we don't have it. You can't have it one week and not the next to see what the increase would be. But let's talk about your prices for last week. Negotiated direct the 5-area feeding region. Live steers and heifers ranged in price from $137 to $147, which is another $10 spread. But we saw that $10 spread earlier in the week, and we saw it early the previous week. But that 137 was pretty deceiving. That was on some Mexican origin cattle that were not in a cluster of the feedlot areas on the Fed Cattle Exchange. So those cattle being in that range is pulling it down quite a bit. Then some 138 that was sold. I'd heard on most of those deals that was inferior cattle. At the 138, it was mostly 140 up to 147. And of course, there wasn't a whole lot of 147. But anyway, that range was $1 lower. Your weighted average is where your rubber hits the road. Weighted average on live steers, 142.39, about $1 cheaper than the previous week. Now, dress sales were quite a bit lower, 222 to 230. Now, not a lot of that 222. That was in Kansas. We don't sell a lot of cattle dressed in Kansas, but it was mostly 227 to 230. But your range there on your dress sales was $4 to $6 lower. Your weighted average on dressed steers, 229 even, and that was about $2.50 cheaper than the previous week. So we sure lost ground. We knew that we were going to. Friday, not a lot of trade. Did have a little bit in Iowa, 900 head. They had about 17,000 for the week there. Live sales 142 to 144 on Friday. Dress sales at 228. Nebraska only 100 head confirmed on Friday, not quite 35,000 head for last week's negotiated trade in Nebraska. It's about typical for them. The only price they had on straight cattle there in Nebraska on Friday was 227 dressed. Kansas nor Texas had any confirmed sales on Friday. Kansas moved a little over 14,000 for the week negotiated, and Texas about 9,500. Box beef cutout values were lower, but it does look like they finally found a bottom here. Short term, because your weighted average on all of last week's sales on choice cuts was $256.95. That was down $1.34 compared to the weighted average the previous week. But your late Friday afternoon sales were a couple of bucks higher than that. So we're on the way back up. Your selects, your weighted average for all of last week was $243.18, down $3.64. But your Friday afternoon sales were close to $244, so about a buck higher than that weighted average, so it's on the upswing too. Slaughter for last week, 657,000, exactly the same as the previous week, and 13,000 more than the same week a year ago. Talk about your feeder cattle market. Your real-time index on DV auction ended the week at 155.36 based on an 800-pound steer. That was down 51 cents for the week. And most of your sales were cheaper last week, especially mid to late week. And you know, that WASDE report that we talked about a lot on our visit for Friday, it's kind of the beginning of the growing season. First WASDE report, your world ag supply and demand estimates, and it was fairly bearish for corn, although corn went up the day of the report, but then it was back down quite a bit on Friday. It was about neutral for beans, even though beans were up big on Friday. And Kansas City hard red winter wheat was bullish on their report, which you can see that if you've driven down through the southern plains anytime lately. But that was a big time report there. But your mid to late week sales had yearling feeders sure lower there, and they ended steady to $2 lower. And there was some firmness noted on big heavy feeders earlier in the week last week. Those weighing up in the 9s and bigger than that. They sold some 1,000-pound cattle pretty high last week around. But feeders were sure off a little bit, and you can expect that when your grains are up. But calves were higher again, and I mean, it's green grass time. People are wanting calves, especially those that are weaned, ready to turn out. And there's not that many of them showing up around, guys. Our receipts are really light, and then they're going to get progressively lighter as we move into the summer when everybody's got all their cattle turned out, even though it's dry. But there's not going to be a lot of cattle moving. Look at some of your sales late in the week. How about Fort Scott, Kansas? About 1,700 head there. Look at these loads of 7 and 8 weight cattle that I pulled out of there. And just this selection that I pulled out ranged in price from $145 to $157.35. Pretty good sale there in Fort Scott, Kansas. How about a big sale? Lexington Livestock Market in Lexington, Nebraska. At about 2,600 feeders there. Good sale there. Compared to 2 weeks ago, some good market reporters there called that mostly steady. If you look at this automated market report, you can see your best tested weights were in your bigger yearling feeders there. How about 776 head of 8-weight steers? They averaged 859 at 159.47 on your weighted average price for all your 8 weights there in Lexington, Nebraska. 553 head of your 9 weights averaged 961 at 148.11. Heifers, 552 head of them weighing in the 8s, averaged 857 with a weighted average price on your 8-weight heifers at 142.16. Sounds pretty good. Give you a couple of individual quotes. How about Mankato, Kansas? Mankato Livestock there sold 135 head, 783 pound good black green steers there at 169. But the best quote that I saw anywhere late last week come out of Lexington, Nebraska. Of course, it's your Ralgro top quote for the day. 109 head, 752 pound steers in Lexington, Nebraska at 176. That's your feeder flash for Monday.